Obtaining a car loan can be very beneficial in the buying process, but it means that you agree to pay the loan in full within the term established by the lender. In the United States, auto loans are one of the best options for buying a new or used car through a dealer or independent seller. Basically, it is financing that the bank can make available if the buyer meets their criteria. Auto loans are established through a contract between the company or entity that grants the loan and the applicant. In this sense, they assume that certain conditions are met, including the payment of the corresponding interest, which may be negatively or positively affected by certain factors, such as the economic history of the applicant. What is the average interest rate for car loans in the USA? Auto loans require the buyer to pay the full amount of the loan on time. To make things easier, the same company that sponsored them set up a monthly payment plan that included appropriate additional fees and interest. These fees and interest are calculated based on Federal Reserve regulations on the matter, but are also affected by credit score. Applicant, which may vary based on your financial habits, or other factors, such as length of term and eligibility. With payment terms. In general, the average interest rates for auto loans are as follows: 1. Credit score of 750 or higher. New car loan, 12.87%. Used car loan, 13.12%. Refinancing, 7.72%. 2. Credit score of 700 to 749. New car loan, 14.09%. Used car loan, 14.34%. Refinance, 8.49%. 3. Credit score of 600 or 699. New car loan, 17.16%. Used car loan, 17.41%. Refinancing, 10.09%. 4. Credit score of 451 to 599. New car loan, 22.18%. Used car loan, 22.43%. Refinancing, 13.46%. 5. Credit score of 450 or less. New car loan, 23.65%. Used car loan, 23.9%. Refinancing does not apply. Requirements to obtain a car loan in the United States. Although the requirements may vary depending on the lender, there are some basic precautions that anyone who wants to obtain a car loan in the United States must meet in order to be successful in their application. 1. Documents that serve as identification: driver's license, passport, identification card, military identification, government-issued photo identification or social security number, SSN. 2. Documents proving residential address, utility bills, rental contract, voter ID or document proving home, apartment or car insurance. 3. Documents proving the applicant's income, payslip, W-2 form, bank statement or IRS tax return. 4. Any document showing current monthly expenses, mortgage or rent documents, utility bills, loan payments, insurance payments, student loan payments, or credit card payments. 5. Credit score. This can be obtained from companies that specialize in providing this information, such as Experian, TransUnion, or Equifax. In the video description I leave you a link to a personal loan platform in case you need one. Thanks for staying until the end.